outside. May I request everyone who's outside the hall to kindly join us inside for our Fireside Chat, which is going to start in a few moments from now. Everyone present in the hall, you're all requested to kindly be seated with your electronic gadgets on silent mode from now onwards. Thank you. Once again, I request everyone to kindly settle down. We wish to begin with our session, and our guests have already arrived. I request all our members present in the hall to kindly be seated with their electronic gadgets on silent mode. Request you all to kindly settle down with your electronic gadgets on silent mode. Our guests have arrived in the hall, and now we would begin with our fireside chat in few moments from now. Good morning, Namaskar, Swagatam to the Day 2 of Sa-Dhan National Conference on Inclusive Growth 2023, celebrating Silver Jubilee Year of Sa-Dhan with its theme, Microfinance Marching to Amrit Kal with 25 years of inclusive impact legacy. Ladies and gentlemen, we begin the day with the Fireside Chat on Microfinance, a boost to rural lives. We're very privileged to have with us with very distinguished guests as speakers of the session for our Fireside Chat. Please put your hands together as I welcome our guest onto the stage. May I invite on stage Consulting Editor Business Standard and the moderator of the session, Shri Tamal Bandyopadhyay, onto the stage. Good morning, sir. May I also invite our very distinguished speaker of the session, former Deputy Chairman, Planning Commission, Padma Vibhushan, Shri Montek Singh Ahluwalia. Very warm welcome to you, sir. Good morning, sir. I've been a huge fan. Ladies and gentlemen, before we call this session to order, may I request everyone to kindly settle down with their electronic gadgets on silent mode from now onwards. May I request our Associate Director from Sa-Dhan, Mr. Chandan Thakur, to kindly join us onto the stage and welcome our guest with a plant. Please put your hands together as we welcome our guest with a plant. Presenting a plant to Padma Vibhushan, Mr. Montek Singh Ahluwalia. Very warm welcome to you, sir. We also present a plant to Shri Tamal Bandyopadhyay. Before I request the moderator of the session to take over, may I say a few words about our guest. Shri Montek Singh Ahluwalia, an economist and civil servant, was former Deputy Chairman of Planning Commission, Government of India. Mr. Ahluwalia has been a key figure in Indian economic policy. For his outstanding contribution to economic policy and public services, he has been conferred with the prestigious Padma Vibhushan in 2011, India's second highest civilian award to the exceptional work and his distinguished services to the country. Ladies and gentlemen, we also have with us as the moderator of this session, Shri Tamal Bandyopadhyay, an award-winning author and columnist. His weekly column, Bankers Trust, is widely read for its incisive analysis and informed opinion. He's currently consulting editor with Business Standard and senior advisor to Jana Small Finance Bank Limited. With those words, may I request the moderator of the session to kindly take over.
Thank you, and a very warm welcome to this session called Fireside Chat, a candid conversation with Dr. Montek Singh Ahluwalia. This lady was introducing Dr. Ahluwalia. If you don't know him, you should not be here. so he doesn't need an introduction. And my introduction was a waste of time. You don't need to know me. Welcome. Welcome, Dr. Ahluwalia. I mean, I don't know, I am from Mumbai. In our circle, apart from your contribution and what India today in this entire from the 1991's economic liberalization, that's always people talk about it, and also people talk about the color of your turban, which often resembled exactly the same color Dr. Manmohan Singh used to wear. Is that correct?
Well, I think we both seem to like the color blue. That's certainly true. Whether it's exactly the same color, I can't say.
That's what I don't know, because as I said, this is my second meeting in my life, and I'm fortunate, privileged enough to be with you, sir. Talk is microfinance,
Yep.
and we just had 1 minute, or less than a minute outside. He has given me the permission that whatever I want, I can ask him. Of course, it has to be useful for it. So, talk of turban is just only one stray incident. We are not getting back to microfinance. I just have a very small, brief intro, and then we'll get into the conversation. So the term financial inclusion got into the lexicon of Indian financial sector in 2005, financial year 2005-06. I think the first monetary policy, those days were 2 policies a year. Dr. Reddy was looking for a right word, and one of his colleagues found out the word that we are talking about inclusive finance, so let's get into that. And that after that, the BC system came in place, etc. But microfinance per se is a much older entity, which is, from in the 90s, the first microfinance entity came. And even going back in the 18th century, we had some cooperative movement, etc., following Germany's example. All those kind of things happened. And then entire banking sector, we have seen to reach out to the underprivileged segment, banking sector has introduced priority sector lending norm. And then we have also various structural changes like local area banks, regional rural banks, then the latest one is small finance bank. But microfinance, is it absolutely different entities? It gets into the hinterland, it gets into the rural areas where no bankers actually ever there, even despite the technology. And it's very relevant, and as we speak, particularly over the last 1 year post-COVID, we see a rebirth and revival of microfinance. The probable factor is that the hygiene has changed. The GST and then demonetization and finally COVID, all these things have changed the landscape for the better. So here I end, sir. I just want you to talk about actually how much is the reality microfinance changing the lives of poor in rural India, and how much is a myth?
Well, this is a subject that should be answered on the basis of some solid research. I'll give you my prejudice. My prejudice is that it is changing. Actually, I should use this opportunity to congratulate all of you in the microfinance area. Because if you look at any of the numbers, I can remember going back to when SEVA was the only sort of microfinance organization. And then you had Muhammad Yunus in Bangladesh. And I think those were the days when on the one hand you had money lenders, which had all their own kind of problems. And then you had a banking system and also a cooperative banking system. The cooperative banking system was riddled with problems. It brought none of the advantages of a community approach because it was just captured by politicians. These were not seriously banks at all. And it's only the unwillingness to face facts that we kept calling them cooperative banks. Okay. But there was a need obviously there was need for credit. And of course our banking system in those days would only give credit, let me just, in those days our banking system would only give credit for productive purposes. But any economist knows that one of the roles of credit is to even off the pattern of consumption in a situation where income is variable. And they wouldn't normally give loans for evening consumption, and they wouldn't give loans which were not secured. And this meant a very large part of the community, and especially women who did not have collateral which they owned to pledge, were being denied credit. And I think that the initial approach was that, look, microfinance, self-help groups, that kind of thing, they bring a kind of a community willingness to repay, which is a very important part of any lender's assessment, okay? And I mean, obviously these institutions expanded. In the very early days, you remember, people would complain about high interest rates, and there was even a movement to regulate interest rates. And I made the point that, look, these guys are competing against money lenders who are probably charging on a compound basis over 100%. So the fact of the matter is that if they're lending to the same group of people at 24, 25%, I mean, that's not a bad thing. I think slowly, I think we still have maximum lending rates. It's not very clear to me that that is sensible, in the sense that why not let competition prevail? But, chalo, they're quite high, 25% or whatever it is. So I have no doubt that this is fulfilling a very important role. You know, the real question is that this universe is also going to change. I mean, one view at one stage I had, many people had, that, you know, microfinance organizations have a managerial culture which enables them to get close to the borrower. And of course, when it's self-help group, you're creating the community feeling to increase pressure on individuals to pay, which is important. But most critical thing is that, you know, you are able to operate in areas where banks wouldn't be able to get to. And banks have priority sector credit requirements, and maybe it would be better for the banks to actually lend to the MFIs and let the MFIs do the final lending and let the lending to MFIs qualify as priority sector, which I think is allowed now, okay? But of course, this has also led many banks to buy out MFIs. So that has some advantages, because MFIs get a more assured access to risk capital from the bank itself. Whether it will alter the culture of the MFI is the real question. I mean, will MFIs start wearing suits and ties, the employees wearing suits and ties and behaving like bank employees, or be more people-oriented? That's an open question. You know, I think when I looked at the figures, in 30 years, there's no doubt that this sector has established the proposition that there's a big space here which needed to be filled. And it has grown very well, for which you all deserve congratulations. And I'm quite sure that it will continue to grow, because on the financing side, the unique dominant role of banks is also getting eroded. There are banks, there are fintechs doing other things, there are NBFCs, there's the capital market, a whole new kind of risk capital sources coming up. So I think this is part of the maturation of the financial sector. But as in virtually every other reform, I think we should have done in 15 years what it has taken 30 years to do. But I was told that very recently the RBI has further improved the condition, in the sense that earlier there were restrictions on MFIs on how to assess borrowers different from the restrictions on banks, and now they've made it a level playing field, which is, to my mind, sensible.
Absolutely. I mean, it's such a, who would say that he's an outsider? Because in such a brief way, he has actually covered this 360-degree angle of the microfinance industry. I think give a big hand, and that just see the points he made, and it's so relevant that yes, you guys are charging higher, but probably it's justified, not exactly, but you are far better than money lender. That's the thing. That's your advantage, because you are competing not with banks but with money lenders. But he also said that you should consider the interest rate. Still, it's pretty high, and the merger, the banks overtaking or the merging microfinance with it. The latest was the Kotak Bank has gone. The cultural issues that can come up, and finally the level playing field which has been created between banks and microfinance with the new RBI norm which came into effect from April 2022. So wonderful, Dr. Ahluwalia, I mean your assessment. Tell us for the government schemes, like how in the role of implementation of different government schemes, what can microfinance play? And just to give an example, one thing, this PMJDY, which was announced in August 2014, the world's largest financial inclusion kind of drive. As we speak, I think 50.8 crore Indians have been enrolled. But if we talk to the bankers, the inside story is, look, they have their DBT coming through this, they have their deposits with us, but are we comfortable giving them money? Not exactly. Because which you hinted that it's microfinance has the community approach and uncollateralized loan, unsecured loan that they give and all. So this is one scheme. I think it's glass half full, half empty kind of thing, whether it's a success or failure. And there are various other government schemes. So how would the microfinance play the role in changing rural India, making it Atmanirbhar Bharat? What do you say? What are the ideas you think?
Well, one of the very interesting articles I read in the days when I used to read articles, they now become too complicated, was by Joe Stiglitz. And Stiglitz made a very interesting point about microfinance and self-help groups. I mean, he said that, look, it's great that the self-help groups provide some money, and of course they provide it at a higher interest rate, but it's more competitive than money lenders, etc., etc. And he said there's no doubt that to those who don't have access to the market, this is a big help, okay? But this isn't the solution for those who want to graduate from being, if you like, first entrance into a productive activity into something bigger. I mean, for example, a woman in a rural area has a certain amount of free time, and so she decides to rear chickens. Okay? She thinks that she can take care of the chickens within her overall household responsibilities. And the main reason that she's actually finding this productive is that she values her labor at zero. Because, I mean, otherwise if she has 3 hours a day to spare, she can't earn any money by turning up for 3 hours. But if she proves to be a successful chicken farmer and then wants to expand and hire people, then she can't make do with the high interest rates that microfinance would charge. She has to have access to the banking system. So I think in a way what the real role of microfinance to my mind is to be the nursery which shows you who are the people who actually have entrepreneurial capability. But if you want them to then expand that entrepreneurial capability, you can't expect them to be relying on microfinance at the rates of interest that would be charged. In a way, their record with the microfinance organization helps them. It establishes their credit worthiness. I mean, if they've serviced microfinance loans at a high interest rate for 2 or 3 years, that's of value. And that's why I think when banks either partner with MFIs or even buy them up, it creates a seamless way of moving from complete exclusion to full inclusion. I don't think that MFIs can be the solution to achieving full inclusion. They have to be an intermediate stage. But intermediate stages are very important in any credit market. So in a way, it would be interesting to judge if you're doing funding some research. How many MFI customers have graduated to getting bank loans, and how have they performed? And do banks find it that when they start giving loans to someone who has had a good track record on the microfinance area, the NPAs on those loans, are they better than these other things that the government sort of announces? I mean, one of the biggest problems with all this, of course, is all governments love the idea of writing off loans. Fortunately, so far, we've been doing it largely only for farmers, which is a very special, unique kind of character. But you know, if banks start lending small loans and governments start sort of announcing write-off of all small loans, it will be the most disastrous thing you can do for the credit culture. Hasn't happened yet, but let's see.
But Dr. Ahluwalia, I mean, banks do that for big corporates. You see that?
Yeah, that is the argument that will be made. But it will spell the end of effective credit. I mean, what banks do for big, this is why the IBC is meant to be different. In that, you know, even there, I mean, we are encouraging some little write-offs in certain circumstances. But the old idea that you could just take the bank for a ride and get away, hopefully will come to an end, or has come to an end, I don't know.
Thank you. I think he has clearly suggested, and the Sa-Dhan and an SRO, I think you should get into the research that we have been talking. I did raise, if you remember, that people do, particularly those who invest, they do want to know what's the number of people your lives have been changed, or whatever, you have graduated from microfinance to banker. So I think that probably you should now take it seriously. Dr. Ali is saying that, doing some work on that, and that will become more credible. Other part, we are saying that it has to be only alignment with the banks. In a partnership model, that's the best way to go.
That makes a lot of sense. I mean, look, if the problem is MFIs are not allowed, and I agree with that, they're not allowed to take deposits.
Yes.
Now, deposits are insured, they're an assured way of getting low-cost funds. So if you can't take deposits, then the cost of borrowing is going to be high, and the cost of lending is going to be high, and it's the institutions that can take deposits that will be able to lend cheaper. So that's why, I mean, MFIs should serve as a bridge to enable people to get to bank lending. But I think the great role they can play is to certify the credit worthiness of the person concerned. And that, to my mind, is a very critical thing.
So in some sense, are you suggesting that they should go for the BC model, like the banking correspondent? They become the bank's arm for originating loans, and the risk is the bank, the loan
yeah,
is
you could have partnerships of that kind with different ways of risk sharing. Banks could very easily take the view that if an MFI has, as it were, some of his own money in the game, some of his own skin in the game, that they're willing to pick up the risk. Many ways of signaling what is a good potential borrower. My guess is we'll have to do that. The other thing, quite honestly, is I think MFIs, up to now, I think MFIs, by the way, I'm expressing my views freely,
absolutely,
but it is grounded in sheer ignorance, in the sense that these are prejudices of, you might say, an informed person, but I haven't done any research on these things. One of the critical things is the whole digitalization process. Are MFIs going to take the lead in that and push digitalization? Because quite honestly, if more and more of their customers start, you know, getting digitally savvy, and they're interacting with banks digitally, then MFIs have to actually do the same thing. And I don't know whether enough of them are doing it. You know, my guess is what will happen in due course is a shakeout in the system. I mean, to some extent, that shakeout is taking place with better MFIs, bigger MFIs buying up smaller MFIs, with banks buying up MFIs, banks partnering with MFIs. So it'll be a constantly competitive environment. And how effectively MFI managements can ride on the digitalization wave is going to affect their ability to compete effectively.
Thank you, Dr. Ahluwalia. Again, he is holding the mirror to you, industry, that this is what exactly, even as an outsider, is just exactly hitting the bullseye what's happening there. I mean, you need to embrace digitization. I think all the entire MFI's industries disbursement is now 100% 100% cashless, but when it comes to collection, most of them are still getting the cash collection note, because the disbursement they do through banks, but collection is cash kind of thing. So that's one part, and digitization, you need to be digitally literate, otherwise you run the risk of being obsolete or useless. That's what he said. And I wanted to ask you about the role of technology. I've already answered. I just want to understand one thing. You gave the example of that lady, a potential customer and all. So would you like them also giving beyond, one is the last mile connectivity, and you have a bank to back up on the liability side, so that you have the money and you collection and all. But would you also like them to handhold those early entrepreneurs? Meaning, I'm just saying, going beyond giving money, also training them, and that's the kind of thing you also would like to be with them, with their business, and make sure that this lady, that particular lady you spoke about, over a period of time actually become that. So the kind of knowledge and all she does not have, the industry actually offers her that. Running workshops, community workshop, all those things also, you think that's what needs to be done?
No, certainly for this category of people, a certain amount of hand-holding makes a lot of sense. But in the end, you have to leave that to the customer. If the customer doesn't want your technical advice on how to run a chicken farm, then I mean there's not much you can do. But my guess is that if you're talking about people entering the system, they are sufficiently happy that you're lending to them. They're probably in the initial stages intending to borrow even more. So their willingness to listen is going to be great. At some point, they will find that they know more about their business than whoever is running the MFI and approaching them. But by then, they will probably move to banks to get loans anyway. In the end, I mean, it's not the job of a banker to know how to run a chicken farm. Elementary accounting and that sort of thing, yes. But otherwise, we ought to have other mechanisms which inform people that, look, what kind of chicken do you rear, what are the precautions you take.
Marketing part.
All of that kind of stuff, yeah.
Marketing part.
Yeah, which is not, to my mind, not a finance function. Really.
Okay. So essentially, Dr. Ahluwalia, you are saying that you graduate them from MFI into the banking fold. That's the intermediation. Yes. Somebody does not have access to money. You go there, you made money available to them at a reasonable cost, probably more than bank's cost, but then still.
Well, either to the banking system or to a full-fledged NBFC, whatever it is, basically.
Right. And then you graduate. That's the thing. That intermediation, that churning will continue to be there.
That's what I would think.
And Dr. Ahluwalia, what's your take? Like you spoke about digitization and all. Now, do you see that digitization will be the main plank, or you also, people what they say, particularly in this segment, touch is very important, because you need to know the people, how the business is doing, you need to visit them often, you need to talk to them about weather, about chicken, about their children going to school, you need to have a cup of tea, otherwise default will increase. So you have to be a phygital approach, both physical presence, meeting them, and that of course goes to because the operational cost goes up, and that's how we justify your higher cost also. So are you a believer in that this is a community for them, keeping in touch with them also equally important as technology?
Yeah. No, clearly both are important, because look, far too many people are actually excluded at the moment. So that role of expanding the scope to bring in the first round of inclusion will remain important for quite some time. When I said digital, I didn't mean to replace the person-to-person touch. But you know, for example, I mean, if the person wants to repay even before you visited, they should be digitally sufficiently knowledgeable to make the repayment. And that will show up somewhere or the other in their credit record.
So digitization technology should help them, but they should not give up the physical touch.
Yeah, clearly. I mean, you know, that's clear.
One, if you look at the history of MFIs from late 90s till now, I mean, the past more than 2 decades, 2.5 decades and all, you see two things happen very often, and that's what create problems. Actually, twice problem happened in 2010. Reserve Bank of India first time came up, and of course, capping the loan rate 10% plus your cost of fund, etc. And then you spoke about the level playing field between 2022. Now, on both occasions, the provocation was MFIs were running some concentration risk in certain particular areas, certain geographies. So, there is a huge opportunity, but you will find that they are flocking to the same place. And then they are encouraging over-leveraging by the same set of borrowers, etc. And then there comes about the collection and not the right way of how to collection. You know, and that creates problems. So in 2010, Andhra Pradesh came out with the local law because money is a low state subject, and that almost killed the MFI industry. In 2020, before COVID, we had some problem in Assam also. Assam government stepped in, and then RBI stepped in. So that's about this system, the trend of MFIs, and I'm talking about the industry people out there, and correct me if I'm wrong. I mean, how do they change this? How do they change this, that instead of concentrating at one particular region, go everywhere? And how sensitive and all for this kind of people collection, if you can tell us.
Okay, this will have to be the last question because
sir, I know you have to rush.
I was told
I have one line, your message to them. Okay. I know that, sir. I will not get into too much.
You know, I'm not in favor of imposing these restrictions for the simple reason that the rationale of regulating a financial institution is that it has a lot of depositors, and the purpose of regulation dominantly is to protect the interests of the depositors, right? That's not the case with MFIs. The other rationale for regulation, which is what kind of applies to NBFCs, is you don't want them to generate system risk. That can only happen for a large NBFC.
Absolutely.
So these guys are not large, and they're not taking deposits. So frankly, I don't think you should have these regulations. Now, I know that one always says that, and regulators will always say, no, we are doing light touch regulation. But I think you should keep them on the defensive. What value are you adding? Because when you're taking deposits, it's absolutely vital. And when you're large and posing a systemic risk, it's absolutely vital. If you're not, you're putting your own money at risk. What does it matter? I mean, if an MFI goes wrong, it'll collapse. Somebody will buy it up. Yeah?
So they're clapping because you are saying that.
They should retain that. Okay. I think.
Dr. Ahluwalia has to rush because he just said half an hour. We could have started 5 minutes before, they could have gone right. But the last question, sir.
Okay.
We are talking about, I mean, that's cliche now, India, 5 trillion economy. Now the next thing is we are talking about being the third largest economy after US and China, overtaking Japan and Germany by 2030. That's the S&P talks about that and all. So if in that landscape, what are the key messages for you? What kind of role you expect MFIs to play? Because the context is India is growing, but in various segments, and rightly so, we have been discussing the so-called K-shaped growth for only the rich become richer, wealthy become wealthier. Rural India is not there. The gap has been widening post-COVID. So that's one aspect. Other aspect is our ambition and our macroeconomic stability. We are the oasis, we are the great engine for growth globally, and we are heading towards that. So this is the scenario, and there what are the key things you expect from the MFI's industry for their sustenance as well as changing rural India and the poor people, bringing them out of poverty? I'll not say anything, sir. Yes.
Look, I'm in favor of greater ambition. If you don't have ambition, you'll get nowhere. And all this 5 trillion has now been postponed. It was meant to be achieved next year, but it's not happening. Now we're saying 30 trillion by 2040. That's okay. I think the CEO of Niti Aayog very sensibly said that they've been asked to work out a detailed roadmap. And whichever way you look at it, what they will end up with is that we've got to grow at 7 or 8% in real terms during this period. Then there are a lot of questions that can we do it, can we not do it? You know, even if we don't grow at 7%, we could probably grow at 6.5%, certainly at 6%. Below 6%, we're doing badly, in my view, because employment will not grow. Now, I don't think MFIs can make the difference between whether we grow at 5 or whether we grow at 7.5, okay? But there's no question that if we grow at 7.5, the system will support the upper end of that growth process. And the inequality issue becomes very important. And as long as we have as many people as we do in rural areas, and that's going to continue, there will be a lot of entrepreneurial capability of people who can uplift themselves, including by improving their farms, including by providing services. I don't know, I mean, buy a drone and use it in order to do all kinds of services to nearby farmers. That kind of stuff will require access to credit, and I just don't think our banks, private sector banks are not interested in that. They don't go into rural areas, right? If you push the private sector guys, they will buy up a couple of MFIs, which is not a bad idea. Okay. Public sector banks cannot, they just don't know how to lend, because basically they're rule bound. I mean, I remember going to some private sector bank somewhere in the south, and I asked the guy, I said, you know, how come you're expanding so rapidly, and you're sitting next to public sector banks, and surely, you know, you can't compete against them, they have a lot more money. And he said, yeah, you know, they have a lot more money, but they can't keep NPAs low. So I said, why can you keep NPAs low? And he said, you know, the most important thing is when somebody comes in to borrow money, I look at them and I say, is he going to repay my loan or not? All the rest of the stuff, my accountants do. And it's not possible to run a public sector bank on that basis. So inevitably what happens is they will go for the bigger fish. And they will meet their sort of priority sector requirement by offloading it to MFIs. So frankly, I think MFIs will have a good run for their money.
Okay.
Thank you.
Thank you. I think this is not an armchair view. This is not a helicopter view. It's an absolutely candid conversation. I don't want to summarize and waste your time about not only MFIs, about the entire financial sector and banking. Thank you, Dr. Ahluwalia. And you have learned a lot from him. A very simple way he said many things and held the mirror to you. Thank you, sir.
Thank you so much, sir, for that very insightful and exciting fireside chat. Ladies and gentlemen, we would like to present a memento and thank our guest and extend our heartfelt gratitude. I request EDN CEO Sa-Dhan, Mr. Gigi Maman, to kindly present a memento to Shri Montek Singh Ahluwalia. We present a stole and a plaque. Presenting a coffee table book and BMR. Presenting a coffee table book and BMR to Shri Montek Singh Ahluwalia. Ladies and gentlemen, a huge round of applause, please. We also thank our moderator of the session, Shri Tamal Bandyopadhyay. Thank you so much, sir, presenting a stole and a plaque. We capture this moment in our cameras, presenting a coffee table book, 25 years of Sa-Dhan and BMR. Thank you once again, sir. We would now request our guest to kindly step forward for a group photograph. Can we once again put our hands together and thank our guest for a very exciting session. Thank you so much, sir. Like always, it was very informative and very insightful. Thank you once again.
Great fan of yours.
Ladies and gentlemen, in few moments from now, we will move forward for a presentation on climate risk management and parametric insurance solutions for MFIs and FIs by Mr. Balachandran, who is the head of Growth IBISA Network. We'll take exactly a few moments to set it up. May I request the head of Growth IBISA Network, Shri Balachandran, to kindly join us onto the stage.